Thanks for being with us. We come to you live from the Suzlon studio. Let me bring on board Devarsh Wakil, HDFC Securities, joining us this afternoon. Of course, we continue to have Arpit as well as Kunal. Arpit, just again, I'm trying to figure out what should one do in a market. Hi, very good afternoon. Which is becoming extremely stock specific, right? What do you do if for example, you're looking at a space like Redington, the kind of 8.5% move, Arpit, what next on this one?
See, definitely, if you see from last couple of weeks, a very stock specific and sector specific and result impact across space we are seeing, where the stocks are moving up by 10% on the upside or on the lower side. If I look at the technical structure of Redington, so if I see the monthly setup from June 2025, the stock corrected from 340 to 220 levels, and a very sharp recovery was seen from the lower levels, and now back again at its life high territory. So from an intraday perspective, definitely some profit booking is seen at the higher levels, and the level to watch out would be 333. So that is the previous all-time high levels. Look in the monthly setup, the stress setup is still strong. However, on the daily setup, some cool off is seen from the high levels. So all in all, if you see from the position setup, 280 to 290 would be a major support levels. On the upside, 333 and then 360 would be the positional target to watch out for. So overall, in a dull market also, the stock is outperforming. That definitely gives a signal that the relative strength is strong and the stock is likely to reclaim its previous all-time high and hit a new life high territory going forward.
It's been, there's been immense amounts of churn, right, in a market like this. Arpit, what do you bet on in terms of sectors and what do you avoid at this point of time? Maybe over the next, till midweek of next week, what should the kind of sector bias be?
We would like to go with two sectors. That would be pharma sector on the positive side, along with the auto sector. So within the pharma sector, likes would be Sun Pharma, Apollo Hospital, and Divi's Lab. As the structurally on all the time frame, they are very strong. Though they have seen a good move, but looking at the structure wise, we can see definitely more upside for next 10 to 15 days. Along with that, the auto basket also, we'd like to go with stick with TVS Motor, Aisha Motors, and followed by M&M. So this would be a couple of ideas on the positive side for next 15 days play on the positive side. Apart from that, if we see sectors that are relatively underperforming, sectors such as railways, selective FMCG, so that would be on the short side idea that we need to play with. So this is a market where you have to go with selective long side counters, along with that few selective short side counters to make a balanced approach for a positional setup.
Let me go across to Devarsh as well. Devarsh, what are you finding interesting in a market like this and what are you doing? We've seen a decent rally this week. Are you just sitting on the rally now and not doing much, or is this still an interesting time to enter names?
It is an interesting time to enter names, I think. Okay. First, as we know, India was getting bulk of the selling from foreigners because our weight in MSCI was going down. And as all of us know, the kind of selling which we have seen in Korean market, Taiwan market, that makes me quite bullish on Indian market because our weightages, which were about 20% on the MSCI index, has come down to almost 12% by the end of April, should start going up. And that means the incessant selling which we were seeing from FIIs should stop. And coupled with the domestic flows which we have already had, I think now is the time where I think the markets which was underperforming for quite some time, we have seen almost 24 months of price-wise and time-wise correction. I think now good times should be here. The earnings season is almost as per our expectation. The expectation is that most of the headwinds which we were seeing from West Asian crisis, our currency depreciating, the FOMC fears of hiking rates, all these things are behind us. I think relatively larger cap stocks, Nifty stocks, and stocks which are in the MSCI indices should start receiving flows. That should help our markets going ahead. So I am actually quite optimistic on the markets for next 3 to 6 months.
Optimistic on markets. Devarsh, in terms of earnings, where has earnings really surprised you the most in this quarter? Maybe a sector or a stock or two.
Yeah, so rather than stocks, I'd say that overall the our expectation was not very high for this quarter. Single-digit kind of growth in the large caps and high double-digit growth in the mid-cap and small cap. That has been more broadly met. The reason why our markets was not performing because our earnings were not growing, and this time also, if I were to look at what Nifty companies have given, it is hardly 6-7% growth which we have seen till now in this earnings season. So earnings are subdued, and that's why the markets have been subdued. But we expect FY27 earnings to be much better than the FY26 earnings.
Okay.
And that means
we have Devarsh, we have you on a patchy line. Let me request my producers and directors to fix that. The commentary coming in from KPIT, but Devarsh, let me go back to you on what you were telling us with regard to Q1 FY27 stock sector, which is standing out. You're talking about how FY27 is expected to be high single-digit kind of growth for Q1. I beg your pardon.
Single-digit kind of growth now, but overall we expect about 12% kind of growth for FY27. So that means remaining quarters should get about 15% kind of growth in order to get the 27 number back to 12-13%. The space which we like, we continue to have overweight on BFSI space. I think most of the concerns regarding the growth in the deposit should be behind. The government has done its bit, RBI has done its bit. So we expect that the FCNRB and ECB flows should start coming in. That should help the deposit growth. And we already have about 15% kind of a credit growth. The private sector banks have continued to manage the NIMs, the asset quality across the board. I don't see any fresh slippages or any industry which is under severe stress. That means the asset quality and the credit cost will remain stable. So NIMs should start stabilizing and go higher. And that means banking and especially the large banks should, as public as well as the private sector bank should perform from here. So going forward, I think we should continue to have overweight on BFSI. The IT is one of the areas where we think that earlier we were quite bearish and underweight. That's where we have recently gone back to the market weight. So stocks in the mid-cap IT sectors like Persistent, Coforge, and likes of that. Those are the ones where we think that if we are underweight on IT, that's where you should allocate capital. The better days are ahead there.
Yeah, but Devarsh, the run-up has been super swift, right? I mean, you've probably gone equal weight and at the absolutely perfect time. Just give us some perspective now with this run-up, and it's no mean run-up, right? It's 10, 12, 13, 17%, 18, 19%, I think, on the index. But you've got specific stocks going anything between 10 to maybe 25% higher in the last 2 to 3 weeks alone. Does anything change, just given the kind of move that we've seen?
The largest stocks may have gone, and that's where I think may not be much upside left. But the kind of business momentum these mid-cap companies have gone, the ramp up in the deals which they have seen, the deal conversion which we are seeing, and the adoption of AI-led transformation in these companies and their customers. I think there is still room for companies like Persistent, Tech, Mahindra, Coforge, and others, which we have under our coverage, where we still see significant upside. So I'm not the one who is recommending to book out of them just yet. They may consolidate for a couple of weeks, but overall, over the year, over the FY27, we expect higher prices here.
Let's find out, Kunal. Do you believe that go a consolidation now? What next? I mean, today, of course, those the kind of gains that we saw has been sold into clearly and evidently so. Give us a sense how you're seeing this going forward.
See, the prime reason for that is over the last 4 days, there have been 3 gaps or up gaps which have been created into these stocks. And, for example, Infosys had 3 consecutive gaps. Coforge has had 2 gaps. persistent, I think over the last 2 or 3 days has seen, a couple of gaps. So these are, very steep kind of a sudden momentum which have come back into these prices. Now, this generally warrants some sort of a cool off or a time-wise consolidation, if not a major price-wise retracement for these names. And I think in that process, if these stocks say ebb off 2% to 5%, depending on the beta for these IT names, that should be taken as a good opportunity for someone who missed out in the earlier rally. So short-term wise, yes, there could be a mild bit of a cool off which could happen, but that probably is more like a part and parcel with an ongoing uptrend which these IT stocks are showing.
Okay, all right. Okay, so that's with regard to IT. I want to also quickly try and zero in, Devarsh, on some of the banks. And within that banking pack, you've got the larger private sector banks, which have largely disappointed. Of course, ex-ICICI, to some extent, those large private sector banks have disappointed on earnings, largely because of margins. But that's not the case with the mid-small private sector banks. Do you go long there instead? Is that really the preference?
Yes, so large as well as the mid-cap banks have done well. Some of the stocks like City Union Bank, General Small Finance Bank, Tamil Nadu Mercantile Bank, we have been recommending these as individual ideas to our customers, and they have done well. We continue to like them for the remaining of the year. So as expected, some segments like loan and the microfinance portfolio were not doing well. And that has led to some underperformance in those stocks. But other than that, the larger private sector bank and as well as public sector banks have done relatively well. And I'm looking at the kind of credit demand which we see in FY27. And we expect that the NIM pressure which was there likely to recede or ease gradually. That means we are looking at healthy profits ahead. We don't see any large fresh slippages ahead. So that means banking should do well, and the credit side growth is there. The deposit growth, which was not was lower than the credit growth. Now, with the help of government's moves, I think banks should be able to garner capital, which will help them grow their balance sheet. So we continue to remain optimistic on mid cap as well as some selected private large cap banks.
And Kunal, on charts, how's this pack looking? Banks, private sector, some of the smaller finance banks, PSU banks, what do you prefer?
Not too much enthused by these stocks as of now. I think because we are going through a patch of maybe a mean reversion of sorts for these large cap private sector banking names, a price cool off, the relative strength study still indicates that we are looking at a point where the PSU as well as the private sector banking names are into an underperforming spree. It could be multiple reasons. One is because the resurgence of the IT, realty, as well as the auto sector has happened. That's why I think banks have taken a bit of a back seat. They are going through their own patch of consolidation. The key which I would look out for on a shorter term basis would be the breakout on Bank Nifty on the 200-day moving average. If we see that happening, say over the next few days, then maybe we can expect that the momentum can come back pretty quickly for the Bank Nifty. Otherwise, I would expect that this lackluster kind of a trend for the bank index would continue for some more time.
Okay. Kunal, today the auto pack, I mean, that's where a bulk of the action currently resides, at least from a sectoral perspective. How is it looking?
Well, it's looking attractive. In fact, there are many of the stocks which are now showing signs of a second leg of up move. You've seen Hero MotoCorp doing quite well from those earlier 4,800 levels to now 5,300 mark. I think M&M had shown a good intraday recovery. The stock had come closer to 3,200, 300 levels, which means very closer to its long-term moving average. Maruti has been doing very well. Eicher Motors has been looking attractive. There are initial signs emerging that maybe Tata Motors PV, a stock which has been a huge underperformer in the entire four-wheeler pack. I think that stock is also showing signs of RSI divergence or bullish chart patterns for itself. So maybe I think we could be at a point where Tata Motors PV can also come back in towards some sort of a recovery over the near term. So I would be selectively bullish on few of these auto stocks at the current levels. The initial bout of a rally for these auto stocks would generally be very slow because there is not too much data point or conviction to this sector. But generally when you see a second leg of up move, that's where the pace of rally, the momentum increases and lot many other opportunities starts to open up.
Devarsh, your take, you've got some of these auto counters coming out with numbers. You had Aisha Motors, you had M&M today. How are you looking at, one, the numbers and the print itself, and second, any favorites within this pack?
Right. So, auto sector has done relatively well, and compared to consensus estimates, they have outperformed. We also have certain auto stocks under our coverage, auto ancillary, where we have we have been bullish. Stocks like Ashok Leyland, Bajaj Auto are on our buy list. If I were to see the upside from here, uh, looking at the various targets which we have, the one which Maruti and Mahindra has more upside, around 20-25% from here in the year ahead. So we have been bullish on auto. I think we should continue to hold them and add on any declines.
Add on declines, in fact. So that's the interesting piece coming on from auto, but plenty of numbers expected tomorrow, and between today and tomorrow, in fact. Tata Steel is expected today. Ashesha here with what to expect.
Well, yes, Harsh, sequentially, we are expecting weak set of numbers from Tata Steel this time, although on a year-on-year basis, the numbers would look really strong. First up, let's talk about India operations, where steel prices have risen on a sequential basis, and this is likely to aid realization growth of anywhere between 9 to 10%. Meanwhile, we also have coking coal and iron ore costs that have risen not only for India operations but even for Europe, and that is likely to weigh heavy. EBITDA per ton, meanwhile, could rise by about 16 to 20%, both on a year-on-year and on a sequential basis. Now, as far as Europe operations are concerned, remember volume growth was already on the weaker side because of the transition that these operations are undertaking. So both the Netherlands and UK reported a decline in volumes on a sequential and on a year-on-year basis in the quarter gone by. Other than that, costs have also risen, because of which EBITDA per ton for Europe could come in at a loss this time around versus a marginal profit that the company had reported in the previous quarter. So all in all, India operations are likely to report resilient growth. But on the flip side, Europe is likely to be weaker this time around on account of higher costs that the company experienced in the quarter gone by.
Okay, all right. So that's the tilt. That's with regard to Tata Steel. Devarsh, metals as a pack, we've seen a bit of a withdrawal, right, from the highs. How should one look at metals now? Would you look at ferrous, non-ferrous? Would you avoid the trade? How should one play it?
No, our institutional coverage has preference over the non-ferrous side, but the opportunities are there on the both metal side, ferrous as well as non-ferrous. In fact, you were just talking about Tata Steel. If my memory serves me right, the last results margins were up at a 15-quarter high, and kind of problems which they had in the European side receding. So, and compared to other parts of the market where valuations are little stretchy, these metals are actually available at a reasonable valuation, and they are throwing a lot of cash flow. So I think Tata Steel, Steel Authority of India, Hindalco, these should be part of your portfolio. They are likely to outperform the markets.
Okay, all right. So that's the tilt. Kunal, metals, how are you looking at those?
Yeah, this could be a good point where traders could look at a contraband metals. The risk reward is now positive. So I think more than the momentum, it's a matter of risk reward. These stocks were almost at 20% higher levels the last 3-4 months back. So I think in that context, at the current levels, Hindalco is something which I flagged off in the morning also as a buy call, going for a contraband, the metal names. So I would sense that selectively metal stocks attractive at the current juncture.
Okay, all right. Devarsh, any ideas, stock ideas for viewers? Any one or two top picks from the house of HDFC?
So we do come out from time to time various stock picks. Harsh, recently, as I mentioned, some of the mid-cap stocks in IT, Tech Mahindra. In fact, niche areas like Sagility, Macmillan Publishing Services, NPS. These are the ideas which we recently issued. We issued Jana Small Finance Bank as one of the ideas a few months back. UCO Bank is one which we have covered recently. So stock-specific ideas, individual stock-specific ideas, our reports are there on our website for viewers to read and understand the risk reward. So viewers can look at that.
A better way to do it. Bajaj Finance has come out with numbers. The profit at the outset looks like a beat versus expectations. I'm going to quickly pull out what was penciled in, but I believe 5 market close. We'll let you go on that note. Okay, numbers continue to trickle our way. How should one look at Bajaj Finance's numbers? Devarsh, do you have a view with regard to Bajaj Finance? Let me throw in Chola as well. Let me also throw in, for example, some of the other NBFCs which have come out with numbers, L&T Finance and the like. Is there a preference there within that NBFC pack, Devarsh?
So clearly, our team has to analyze the Bajaj Finance, so I'll refrain from commenting there. Our current rating is buy with around target of 1100, and post this result, we'll also review it. You mentioned Chola, that's a good opportunity. The market was a little bit underwhelmed by the numbers, and there is an opportunity there. It's when it comes to the business and the balance sheet and the quality of management, I think that's a great business, great opportunity. And because of these recent numbers, the stock has declined there. So there is an opportunity where at declines, if you are looking to increase the exposure towards the NBFC side, Chola could be looked at.
Okay. Devarsh, thank you so much for joining us. We'll let you go on that note.